Thanks very much for coming along. It's really nice to have you here. From the business owners that you're talking to, I mean, are you finding that there's a shift in what they're looking for in terms of, sort of earn-out periods and so forth, or are you finding that it's a straight exit model?
We're definitely structuring more deals and speaking to more people that are looking to have embedded value, and looking to stay with the business and looking to have some sort of shared ownership going forward. And I think that's a really, really good thing. Yeah. So we're absolutely seeing that. I think in a post-COVID, post-pandemic world, you are certainly seeing a number of smaller assets onto the market where people are maybe looking for lifestyle changes or seeing an opportunity, maybe just to take some investment. But equally, there are some much larger assets, and I can particularly speak in telco. You're starting to see some consolidation, some bigger deals coming onto the market. But what I really like is that you are seeing owners, operators, or people that have had their own business that are looking to just share in some of the success going forward. There's less kind of one-time sales, and I think that's really positive, and we welcome those discussions.
Yeah, excellent. I mean, Nigel, I think you probably agree with that from an advisory point of view.
Yeah, I think that certainly the drivers across the market, for the larger deals, the smaller deals, are quite different. We are facing a period now of a difficult period of trading, based around inflation or potentially stagflation, high rates and low growth. But I think that this is something that will pass. If we look, we're told in the papers that interest rates are the highest they've been since we were driving Triumph Toledos and Ford Capris. Yeah. Can you remember those, Ian? But if we for those of us that actually remember the 70s, what happened was we had a massive oil shock in terms of the market. I think I was working in a gas station when I was at college, and I think fuel was sort of 30p a gallon, and suddenly it was 54 pence, in a week. So similarly, in the last, from a period, in April, there's something, inflation was 9% in the month, but 50% of that inflation came from gas oil, and so that's a shock, and that's something which it might not be a bad thing actually for the world in lots of different reasons, but it is a shock, and shocks get worked out.
I think what we've seen is a rolling series of events which have altered how business operates. Yeah. So if you think about Brexit, people are suddenly having to change how they buy, how they deploy, what countries they're going to work in, where they source stuff from, where their employees may come from. You then move into the pandemic, as the other guests have said, the telecom sector was extremely resilient during that sector. So from a portfolio perspective, clients were not taking advantage of government funds that were available. They might have been doing a little bit of furloughing, they might have been taking some VAT holidays, but generally they were performing. And why is that? It's because telco and the SaaS space is mission critical to what those businesses are doing. You cannot just turn off your phone system. You can't not have that order come through because your website is down to take it. So there was a slight pivoting, less people working from offices and the rise of remote working. I think what has really happened is that it's accelerated the digital transformation agenda, and it's brought people's agendas forward by probably 3 years. So people are thinking of going into the cloud or using a hybrid cloud to neutralise some of the cost increases that we're seeing has really come to the front. And therefore what we've seen from an M&A perspective, probably back end of last year and in the conversations we're having for this year, is telecom companies saying, well, I need to become more relevant to my customers. I need to become a one-stop shop for what they want to buy and go deeper into their IT spend as well as their telco spend. And so the rise of people looking to buy hybrid cloud consultancies or workforces that have that specialist knowledge, or bolt-on cybersecurity, or bolt-on remote working, or bolt-on Microsoft applications or Teams applications into this, is really driving what's going to drive the thing consolidation.
Yeah, absolutely right. I mean, the two big factors that affect valuations, as we all know, is is profitability, because you're multiplying how much money you're making. So one of the reasons why tech stocks have fallen down. It's been an over adjustment, but some of those businesses are making less money. So when you make less money, then you multiply it by something which makes less money. When you're looking at the headwinds that Ian talks about, and you've got Ukraine, COVID, the hangover from last year, etc., then that then reduces the growth rates that we're all projecting. So that's the other big part of valuation. So when we get down to the people that we service, the mid-market, those things don't necessarily apply. But as you rightly mentioned, talent has become very expensive. That does two things. We have a small mouse in them. Talent does two things, and right now we're all going to see rising costs for people, and that's going to reduce our profits. And we've all, whether that's the bank or Focus or us, we've all got that. For businesses that are heavily cash burning or they've got a lot of debt, these ones we're already seeing making adjustments. This is very new in the last 3 months. This is the things we've seen.
I think the other factor is supply chain. The global shortage of chips. A little known fact: 80% of the world's neon comes from Ukraine in 2 factories. Both those factories are shut. You have to have neon to make semiconductor
I heard you're very
chips.
disappointed your Porsche deliveries been
That was my snippet of information as well. That was my wildcard.
Yeah. So you need neon to make semiconductor chips. There is no substitute for it. So it's having an issue, and so people are taking orders, but they can't necessarily source the hardware to go and do it. And hardware, as we all know, is low margin business. It's not the exciting piece of it.
No.
But if you can't do the install and wrap around the professional services and build
you
then
can't
in
apply
recurring revenues.
the underlying infrastructure.
Absolutely.
So it knocks off.
How has it affected the way that you do business, Barney? I mean, I'm not going to use the term new normal, because I think, let's be honest, for anybody in the tech industry, it's been normal now for quite some time.
Yeah. Well, I think building on some of those really good points, I think the simple point I would make is if you look ahead, whether you're a small MSP or you're a large provider, I think the opportunity is twofold. You have to look ahead, and you have to think what's going to happen 1 or 2 years ahead. You have to stay ahead of the market. And the second opportunity really is to provide more technology services. If you are a telco provider and you provide voice data and connectivity, which is the heritage of your Focus, I think you look at those areas and you must stay close to the market and realise that as standalone, we know what's happening to fixed line voice, we know what's happening to data. That's where single digit growth is. But you look at some of the other areas like cyber and the opportunity to bundle services and be more of a technology provider. That's the real opportunity. We spent a lot of time within Focus Group at the moment just educating our business, and that is, if we stand still and we shut our eyes and pretend it's going to be as good as it has been for the last 10 years and don't change, then it's going to get a bit sticky in the next year or two. I think there's an opportunity to say we need to provide technology services to businesses in a post-COVID world. I think the market is saying to us, mid-market in particular, we'd like to buy bundled services. We will always want traditional telecom services, but they'll be a foundation of wider technology. If you bundle, and I like you and I trust you, then I'd rather come to you and buy all of the technology services I need to run my business. So that's telco, but that's also things like desktop and cyber on top. So if we're having this conversation again or we're still having this conversation in 12 or 18 months time, I think we've probably missed it. But whether you employ 5 people or 500 or 1,000, just look at what the market's saying and maybe just stay 1 or 2 years ahead of it, because I think the buying patterns are changing, and I think people want to buy wider technology, of which telecommunications will be a key part, but not the only part.
Yeah.
Well, I don't think voice data and connectivity is
It's not a differentiator anymore, is it?
It isn't, and
It's the value-added products.
and simply the growth rates would say cyber, unified bundled communications, cloud, those areas, and voice and data is no. You've got to be sensible and stay ahead of the market. We're going through that at the moment.
I think that is a really interesting point there, which actually floods across different markets around disaggregation and moving back into a more aggregated service provision, because actually we've seen it in media as well, where actually you've had an increasingly complex and therefore fragmented landscape and people buying creative services, digital services from a variety of different providers, similar to telco. And actually, I think now the landscape has got far more complex and challenging, and actually that lack of clarity on exactly who is driving the return, who's driving the value in those providers, is leading customers to want one provider, one person who can actually give the full suite. And as you said, we're a trusted provider, and you can say actually we can do the full set. I think that's real value.
I would. What we, if I use the term digital workspace, that's not a new term. It's been around for 15 or 16 years. But the concept, if you're a small, medium-sized business, of having access to every part of the technology you need to run your business, wherever you happen to be, and increasingly that will not be in the office. I think the opportunity, and for anyone that runs a small, medium or large business, the opportunity to say, I'm going to connect you, I'm going to enable you to collaborate, I'm going to secure you, I'm going to give you access to your productivity, I'm going to give you the device that you carry around, whether it's a fixed line or a wireless connection, the opportunity to say, I can provide you with all of your essential business technology. I think that's really exciting. If you're a small business as well, or a medium business, I would encourage you to be quite excited about the opportunity to maybe take business away from what you traditionally see to be larger competitors, because in a post-pandemic world, and I think the exciting thing is the buying behaviour has changed, and I think people buy from the right profile of service provider. I think it is about the portfolio, but it's about the company you wrap around it. Do I know you? Do I like you? Do I trust you? Can I actually buy all of my technology from you? Do you have the same values? Do you have the same culture? I think people will buy from trusted partners. I think that opens up a whole new world to SME providers, which is really quite exciting.
I think the interesting point is that people haven't changed providers in the last 2 years. They've been too busy.
That's a good point.
So if you talk to any of the people about their business plan as they were coming into the pandemic, there'd be X percentage of organic growth. It just didn't happen. No new major logos. The converse, of course, was that they didn't have any churn. People were too busy to focus on their core business and keep the wheels spinning and the lights on to worry about, am I going to change provider? That's starting to change. People are being much more interested in who they're going to buy from and how it takes the business forward into the next 2 years, to your point.
I think that's an excellent point. If you come back to the point on inflation, cost of living, supplier costs that anyone in technology will be facing, that is by the very nature of it. We are putting our prices up. Our prices from our suppliers are going up. That's going to create an issue where there are churn. So I think very strong sales engines, control of churn, high quality of service delivery are key points, because that comes back to the resiliency question. I think very good account management, very strong engines, the ability to retain and keep people correlates to organic growth. And this whole discussion, however long we're in this room, organic growth is always going to be the key driver of valuations, of good equity value of the business. And I think inflation and some of what we're facing, and maybe the threat of some sort of recession in the next 6, 12, 18 months, I think that resiliency will be tested, because prices are going up, and churn is a very, very key part of that.
Evolution Capital is the first UK corporate finance boutique to exclusively focus on providing advice to the ICT sector. We are the leaders in our field. With activities spanning 3 decades, we have provided strategic and transactional advice to over 200 technology entrepreneurs, shareholders and management teams of both privately owned and public companies. We deliver outstanding transactional outcomes by unlocking intrinsic value in our clients' businesses, by providing expert advice based on meticulous analysis and robust methodologies. This is who we are and how we do it.